welcome back to my YouTube channel. Thank you so much for joining in again. Thank you so much for the love that I'm receiving, and thank you for subscribing to the channel. Guys, I have to say it, please don't forget to share the channel to your friends and family so we all can become financially smart. So welcome to today we're talking about investment. So we are talking about investment because there might be someone out there is like, I have saved and I'm good on saving, but I want to start investing, but I just don't know where to start with investment. There's just so much information out there and I just don't know where to begin. So today I'm just gonna be sharing some more different types of investment and what they mean and what the returns you can expect and what are the risks associated with them. So please be at here and you can learn more about investments so you can make a very informative decision. So remember guys, these videos are not from a financial advisor or institutionalized. These are the videos of financial information that is already out there, but I pack it in a one package and give it to you so that you can make an informative decision. So take it with a pinch of salt, but very informative, very informative. So let's get to today, guys. So we're talking investment. So on investment, there is 6 types of investment that we're going to be talking about today. So I'm going to outline them in different ways so you can have a proper understanding of each and every single one of them so that you can make that financial decision that you need to make there. So first, we must understand there is a difference between saving and investment. Saving, it is taking your money and putting it somewhere where it earns interest, but you have access to that money in a short time or in a longer period. So saving is normally nothing more than 3 years. So it's anything that you save and then you earn an interest out of it, and you can have access to this money anytime you need to be. It's almost like an emergency money, but can be invested in different ways. And there is a video where that is more explained, the link somewhere up there. So please click it and learn more about types of saving that you can do. So today we're talking more about investment. So you want to invest, but you just don't know where to start. So I'm going to be explaining the 6 types of investment that you can have more info on them, and then you can make that informative decision. So number 1, let's start. First one is cash and cash equivalent or cash market. So cash market is an investment type where you invest the money that you have. So on this one, you have money and you can take this money and invest it in a cash market. So this one is more like your unit trust. It's more like taking it and investing it in an entity. So it could be your Old Mutual, it could be your Standard Bank, it could be your Nedbank, it could be Island Grace. So you are investing it. It's monthly money that you have, so it's cash. It's what you have, and then you can invest it on an account. And then this normally starts from anything above 3 years. So this investment is anything above 3 years, so it is a money thing. So what are the risks associated with money or money market investment? So this one is less risky because it's the money that you can invest on month-to-month basis. So this one, they say it is less risky in type of investment. So this one, when it's less risky, it means that there is guarantee what returns on it, but it can vary. So where is the risk? Is it on your investment or is it on your returns? So on cash market, the risk is mostly on the returns. So because the returns are the interest that you earn on the cash that you have invested. So the risk is there in that moment on the returns that you're investing. Chances are on cash, you can always get the money that you invested, but your returns can be affected. So what now that you understand where the risk is at, the risk is at what? On the returns. And remember, the risk is still on the low end to medium end risk. So now what's the risk? So now the returns that you normally get from this one is anything from 5 to 9% returns. So if you invest money in everyday, monthly, on month-to-month basis, or you have a lump sum of it, the returns that you normally can get is 5 to 9% returns. So this one is still on the lower end type of investment, hence why it's considered the low risk management. Low risk type of investment. So that's why it's there. So as I mentioned, the risk is associated with the returns that you invest. So the risk is associated with that 5 to 9%, because that 5 to 9% is the return that you get from the investment. So what affects the returns? So normally the inflation, your interest, what's it called? Your interest sensitivity. So on this one, if there's anything that happens to the inflation, then it affects that return. If there's anything that happens to the interest, or what, if the interest is going high, if the interest is going down, then it affects your return. It can affect your returns in a negative or positive way, depending on how the economy is doing at the time. So this means that, like for instance, since 2024, the interest rate has been going up and down, and recent changes have been announced. I think last were changed in November. I could be wrong. The interest rates did change. So meaning, like, if you started your investment at 6%, and then there's something that happens, or inflation happens, or economy does change, and it changes the interest rate, it means it's either can go up or it can go down. So if it goes up, it means that your 6% that you initially started with might be increased by 0.25, so meaning it's now 6.25, so meaning it has increased. Or if it has affected it negatively, it could be that the 6% is going down by 0.25. So it depends on how the economy is doing at the time. So that's where the risk is associated with the return. Number 2 types of investment that we have is real estate. So this one is property investment. So property investment is buying a property for the sole purpose of making money. So on this one, the risk is associated with both things. It's associated with the capital that you invest with, it's associated with the returns that you can get out of it. So how does one get return on purchasing a property? So on this one, I'm going to illustrate it with an example. So how does this work? So now I buy a house, and the purpose of me buying this house is for me to get a rental income. I'm gonna make a simple example. Buying an apartment in Midrand, and this apartment is a 2-bedroom house, and it's 990,000. So it's either I buy this apartment cash, or I finance it. So I'm gonna make an example where I am financing the property. So now I buy this property. It's a 2-bedroom house. It's in Midrand, and I'm gonna finance this. It's 970,000. How much could I pay on this month to month? Chances are I might pay around 6,000 rand every month to the bank for this property, right? So now every property is associated with levies and rates. So I pay 6,000 rand for the repayment of the house because I borrowed the money from the bank, and then I pay levies. Normally I would say levies and rates, I'm gonna put them at 1.5. So that's how much am I paying on month-to-month basis. I'm paying now 7,500 on this property that I'm renting at Midrand. So now that I am paying 7,900, normally I will also have to pay for the maintenance of the property. Normally, if it's an estate, there's a certain amount of money that you pay so that your house is always maintained. Let's say it's like 300 rands. So I'm paying 7,800 rands every month for this property. So I bought this property for the sole purpose of making money off it. So now, how am I making money? What are my returns on the property is when I rent this property out. And how do I rent this property out? By getting tenant to stay in this apartment. So I'm paying 7,800, and then say, okay, let me rent it out. So how much do I rent it out? Normally apartments in mid-range and areas is around 7,000, 8,000. So because I'm already paying 7,800 rand, I'm gonna say the property is 8.5. So the money that is above the 7.5 is my profit. So that's how I get the returns on my investment property. So as anything else, this still has some risk associated with. So the risk is on both things. The risk could be on the capital of the property. The money that you pay at the bank has risk associated with that, which is the what? Your interest and your inflation. So if anything happens to that, it changes the amount of money you pay at the bank. So if it's on the negative side, like from 2012, we were paying so much interest rate. I think I just do want to write it. We were paying roughly around 11.75% interest rate on properties. That was on 2024 because we were recovering from COVID. So now it is 2024, then the market is not really doing well. So the interest rates are very high at this moment. You are paying 11,075. So meaning that there is an interest of how much money you're paying at the bank. So that's what the capital that you invested in. So what is associated with risk. So now you might pay more money. Let's say, remember at first you were paying 7,800, and now because of the bad inflation, now you're supposed to pay roughly about 8,000 rand, including other expenses. So now you need to pay 8,000 rand, and now what does that affect? It affects your return. So now because your tenant is paying 8,500 rands, now your profit is only like 800 rand. It's only like 500 rands instead of 800 rands. So that changes. So your returns are at risk. Your capital investment is also at risk. So those things, they fluctuate, both of them at the same time in this type of investment. But there's a lot of information on properties that you can use. I know that there is tax benefits on it. I know that there is good type of property investment. I know that sometimes people always say, normally you don't make profit the first 5 years, then you make profit after that. There's a lot of information out there. So if you are interested in mostly buying a property for investment, do check that out. So I do want to outlay some of the risk associated with your returns as well. So we did mention that the could be from the capital. Now let's talk about the returns. The returns one, it could be the competition is too high, supply and demand. So let's say there's new development that is going out there. So someone is not willing to pay 8,500 rand for a 2-bedroom house, whereas the new development they can get a 2-bedroom house at 7.5 in the same area. So it's demand. So it affects the amount that you need to rent out to the people. So that's also a risk. And also is the location of where this property is at. Is it in a location where people can rent it out? Is it in a location where people are not interested? And also there's people that invest in properties for sole purpose of renting out to students, student accommodation, Is this place accessible to student? Is it not accessible to student? What are the costs associated with? If it's a little bit far, what are the association of, like, okay, do I transport these kids? What do I do? So also those costs involved. So always make sure that you understand the supply and demand, you understand the location of where this place is at, and obviously the market related economy factors of your investment. This one is mostly, is the interest very bad doing in property investment, or is it doing good now? And to be honest with you, because of the decrease of from we were at 11.75% interest rate that we were paying on properties. Now we're sitting at 10.25% of interest rate. So meaning it has went down. So meaning it could be the right time to buy properties. And also do look of the economic factors. What is the economy saying? Is it going to be going down a little bit more? Is it going to go up a little bit more? So always check when the market, how the market is doing, and what's the interest rate from that. If the interest rate from is like going down, that means it's the right time, because we were paying so much interest on buying properties. We were paying 11% and now we are down to 10%. So meaning it is the right or appropriate time to maybe think about investing in properties as well. You can also pay it full amount. So you can be likely to say, I don't need to finance it, I can buy this property in full, and then you don't need to worry about paying the capital bank to the bank. So it eliminates that factor of economy factor. So it eliminates inflation or interest, because you already pay the place full. So now what you have to worry about is getting the right tenants that are willing to pay the right amount of money. So that's unreal. Next one is bonds. So what are bonds? Bonds is an investment that you do buying shares at the government sector. So there is a website, it's called the what is it called? RAS Retail Saving Bonds. So that's where you go and visit that website to buy bonds or shares into the government. The interest rate that you can get from there is around 7 to 8% returns on those bonds shown. So bonds are basically shares that you buy at the government sector. Normally that's that. Risk associated with this one as low to medium size. So this one, chances are you might get your returns as initially invested, and there is low risk associated with this one. So what does this mean? Does mean your capital is secure. On government basis, it means that your capital that you invest might be a little bit secure, but where the risk is at the returns, which is the interest that you earn from the initial investment that you invest in. So normally on this one, that means that your returns can be affected by what happens into the government sector. On this one is the economy factor. How does your interest get affected? Economy factor. Everything that we have said, interest sensitivity, also as inflation, the GDP, the growth, everything associated with economy, this one gets affected on your returns. Same thing, it can mean that the interest can go up, the interest can go down. So it depends on what is happening to the market at the time. But I must say it is a low risk type of investment, but it doesn't give much of returns. It gives from 7 to 8% interest rates, and this varies to the amount that you will be investing. So that's what's on bonds. And then we're talking about stock market or shares purchase. This is equity. So what this means, it means that you're buying your shares to a public entity or a private entity in the stock market. So any company that is listed in the JSE, you can buy shares in and invest in it. So on this one, there is different ways to go about it. Most people use this app, like your Easy Equity, you can use, and any other different apps that you can use to buy this different shares. Also this one, little bit high risk on the investment that you'll be doing. So this one, where is the risk associated with? The risk is associated on your initial investment and associated with your return. So this one, it does have effect. So the nice opportunity here is that you can invest or you can invest using a different currency. So meaning you can buy and Google with $1 and then use the exchange rate at your advantage. Just want to explain, I'm gonna make an example. So now let's invest in Capitec. So back in the days, Capitec shares at the time, I'm gonna make an example and say they were 11 rand 25 cents. So you can buy one share by 11 rand 20. So that's how much one share costs you back in the days, right? So let's say at the time you had 20,000 and then you buy shares worth 20,000 at 11 rand 20 per share. So if you divide that by 20,000 divided by 11 rand 20 gives it about 1 point something shares. So now you got an opportunity to you invested and you forgot about that 20,000. And now years later, currently shares at Capitec, this is very much changeable. I think a share now is roughly around 4,500 one share. 4,500 friends one share currently at Capitec. I'm just making an example. These prices can change and varies. So now that 1.7 something shares that you bought years back is worth 4,500 per share. So you take that and times it by 4,500 rand. So meaning you have over about 8 million in investment. So it's high returns, high risk. So let's say Capitec didn't make it. And then you invested to 20,000 and now the shares at Capitec are valued at 6 rand 20. So meaning you're gonna say 1 point something shares times by 6 rand 20. So meaning there's a decrease in that. So meaning you no longer have the 20,000 that you invested anymore. So it affected your capital that you invested with and affect the returns that you invested with. So that's how shares work. So how much the share is worth then and how much is worth in the future, and that is affecting your Capitec and your capital invested and your investment. So it's all in one. Just as I mentioned in this example, if the shares then they were 11 rand 20, but today they're worth 6 rand, that means you lost, then invested 20,000. That means there is a loss associated with that. So with Shopticus, that's how it works. It varies to company. So what are the risks? So the risk associated with capital investment and the returns. So what should you be on the lookout for? On this one, you'll be on the lookout on the company performance, the one that you invested on, the economy factor, the GDP, the interest rate, the inflation. Everything associated with market factors affects your investment in the share market. So you have to be on the lookout for any of the things that happen, especially if you're investing on a short-term basis, which is trading. So meaning you always need to be on the lookout what is happening in the market, in the stock market. So if the rate is going up, if the rate is going down, this is very imperative into your investment. If it's for short-term basis, even if it's for long-term basis, but for long-term basis, chances are you don't know what will happen in the 5 years to come. Yes, we can check some prediction to say, let's say we invest in Old Mutual. So Old Mutual has been here for a very long time, and in the next 5 years, I would read information to say that they appointed a new CEO and they're doing good, they're doing changes in this and this and this, that you're checking at the company performance. Then you're checking at the exchange rate. Look, what's happening in the world? What will affect the exchange rate? Oh, okay, meaning it can be good in the next 5 years. So let me hold on those shares for a little bit longer. Maybe they will be worth much. So how does the financial statement come out of Standard Bank? Did their financial increase from last year? Did they decrease? How are their finance looking? How is the performance overall of the company is doing? Then you check out if this investment is worth holding on to, or if this investment is not worth holding on to. So these things, they change time to time. So it depends on how you are checking it and how you are monitoring them, and it depends on if it's a for short-term basis or if it's for long-term basis. Another types of investment is called commodity. Commodity is when you invest in agricultural things, so it's raw material. It's agriculture when you invest in anything that is raw, gold or mining oil, that's commodity. So you are investing in those things. And then the same thing works on this one. It is quite expensive investing in this commodity part, so it really does require like a lot of money for you to invest in the commodities. But commodities, they work exactly like shares. So how they work is exactly like shares, but this one is high risk, high returns. So everything about it is just high. With stock exchanges, I mentioned there could be moderate to high risk. So some investment are moderate risk, some investment are high risk, but on this one it is considered to be on the higher risk with higher returns in both in stock exchange and commodities. High risk with higher returns, but also moderate in the stock exchange. And then the last one is called other investments. So other investment, it means cryptocurrency, it means different type of investment. This is when you can invest in an entity, you can invest in someone or anything. So it's called different types of investment. This one, you need to grow up a contract to stipulate the terms if you're investing on someone or an entity or anything, because it's called other investment. Cryptocurrency, very expensive. They said there is certain people allowed to buy it, but very expensive. It starts from a certain amount of money. It starts with selected people that can invest in it. That's cryptocurrency if you going that high. But other type of investment, you need to grow up a contract to stipulate the terms of that investment. Let's say you have a cousin who wants to start a shop in Tembisa, and he believes that this shop can be good and be well. So you can invest in that, but you need to grow the contract on the terms of that investment. So this falls as other types of investment. So this is important. Why? You have to draw up a contract to stipulate how this contract will be about. The amount of money investing, what are your expectations, what are the financial standards they should be under, and. So this is a different type of investment. So guys, those are types of investment that I hope they're effective. I hope they work for you. I hope you make that informative decision for yourself to say, this is the type of investment I'm willing to go into about. If you guys are interested in buying stock, just learn about it more before you do that investment. Understand the risk, understand the returns, understand what affects your returns. That is very imperative. So guys, let's go ahead and invest our money in whatever we feel comfortable in investing in them. They help us in the end. So someone said investment is for generational wealth. It definitely is for generational wealth, because investment normally takes a longer period for them to see good and sustainable returns on them. Because if you're buying shares now and then in 20 years to come, that shares has grown to be a bigger thing, that means that it's generational wealth to the children to come. So think it like that when you invest, you are starting to do a generational wealth for your family. So always think like that, guys. Please don't think that you need bigger money to do this. You start with small money. You start with cash and market money investment, then you go to real estate, then you go to stock exchange, then. It's not a formula. You don't need to start from the smallest to the highest. You can start anywhere you want to be. It depends on yourself, but always make sure that you do a research about that type of investment before you invest, so that you can always stay safe and you can make an informative decision. So guys, let's start investing and see you on the next one. Bye for now.